Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for coming on the program, as always.
Happy to be here.
Well, let's start with Wall Street, where last week stocks closed lower ahead of this week's Federal Reserve meeting. We had FedEx, the shipping company, saying basically it sees a recession ahead. Perhaps you could speak to how FedEx is in a position to say that. We saw the Dow off about 0.5%, S&P about 0.7%, and the Nasdaq 0.9%. What's the story in the global markets as we start a new week?
Okay, well, for the U.S. market, especially S&P and Nasdaq, it has been the worst week for them since June. Dow was down for the week by 4.1%, S&P for the week down by 4.8%, and Nasdaq down by 5.5% for the week. There is right now a continuing battle between optimists and pessimists. The optimists say that the U.S. will undergo a recession, but probably a very mild one, while the pessimists believe that there will be a serious recession due to the rapidly rising interest rates. And the evidence right now is mixed, but there has been a couple of serious evidence on the side of serious recession occurring. You mentioned FedEx. The FedEx is in a position to say that the recession is coming up because they are a delivery company as well as a transportation company, so they act as a bellwether for the economy in the future. If the business seems to be picking up, there will be more deliveries, but if not, then there will be less deliveries. And right now, the Fed has withdrawn its full-year guidance for their stock prices, and they're implementing cost-cutting measures because they believe that the economy is going into a slowdown. World Bank has also issued a global recession warning. They do say that raising the interest rates will probably help reduce inflation, but it will not reduce prices significantly. And from the World Bank's point of view, it's not just the U.S. It's the world, especially some of the smaller countries. For most countries, inflation is almost entirely a supply-side problem. Interest rate increase will not do much to lower inflation for these countries, but the United States is one of the few countries where demand is a significant factor behind inflation. So it makes sense if you just consider the United States to raise interest rates, but because the U.S. is the largest global economy as well as center for global financial transactions, when U.S. raises its interest rate, other countries will have to raise the interest rates also. That probably will not do much to reduce global inflation, but it does drive the global economy into a slowdown, which is a very legitimate risk right now. For the year to date, Dow is down 15.8%, S&P is down by 19.3%, Nasdaq is down by 20.7%. For Europe, DAX, CAC, and FTSE were down on Friday. DAX and CAC are down today in early trading as well. FTSE is closed today due to the funeral for Queen Elizabeth. It's notable that pound dropped below $1.14 per pound. It's the lowest since 1985. The Asian markets were down Friday, and they're down to Shanghai and Hang Seng is down today as well. Nikkei is closed today. The Chinese market fell on Friday despite retail sales and industrial production doing better than July and beating expectations. But the market seems to be in generally a pessimistic mood. Yuan has been depreciating. It's rising above 7 yuan per dollar. And some analysts are saying that the psychological line for China will be 7.2 yuan per dollar. If they go above that, then they expect the yuan depreciation to accelerate.
Right. Well, Korean stocks significantly lower today, too. A moderate volume. A battery maker LG Energy Solution down by over 5%. Today, though, not too much action on the exchange rate, staying at this elevated level of 13.90 or so. Tell us about the domestic market.
Okay, well, last week, Kospi lost 0.06%. Kosdaq lost 1%, and Korean won depreciated by 0.67%. Today, Kospi is down 1.14%, and it ended today at 2,355.69. Individuals and foreigners bought, institutions sold, but the amount foreigners bought was minimal, only 700 million won. Kosdaq is down today by 2.35%. It ended today at 751.96. Individuals and institutions bought, foreigners sold. Korean won depreciated today by 0.25% and ended at 1,393.50. Year-to-date, Kospi is down 21.2%. Kosdaq is down 27.6%. And Korean won, since the beginning of the year, has depreciated by 17.2%. But there has been a report released on the 18th from the Korea Exchange saying that a share of Kospi stocks owned by foreigners is now the lowest since 2009. Foreigners account for about 30.4% of the total market capitalization of Kospi, and this is getting near historical lows. Historical highs for foreign share was about 40% in early 2020, but it has been steadily falling ever since, and it is now in danger of falling below 30%. The last time foreigner share of Kospi fell below 30% was in 2009.
A lot of data points converging on that 2009, Professor. Well, this week we'll have a report from the Bank of Korea on the country's financial stability that'll cover private sector debt, of which Korea has a lot, also producer prices for the month of August. What's on your radar, Professor, in the days ahead?
Okay, well, there isn't that much of a domestic statistics beyond what you have mentioned already. But for foreign statistics, the big one is the Fed FOMC meeting, which is coming up on Wednesday and Thursday. On Thursday, the FOMC is expected to announce that they will raise the interest rate. Right now, the betting is on 75 basis points, but there is a substantial number of analysts who believe that they will raise it by 100 basis points. Personally, I don't think it'll be 100 basis points because the Fed, since switching to interest rate targeting, they've never raised the rate at 100 basis points. So this will, if the Fed decides to do that, this will be very unusual and perhaps even historic. But if the Fed was going to raise it by 100 basis points, I think they would have announced some signals already. The Fed usually is not in the market to cause surprises. It's not a TV show where you have something unexpected at the end. So I do expect the interest rate to go up by 75 basis points. What's going to be interesting, what everybody's going to focus attention on, though, is what is the Fed going to do with the two remaining FOMC meetings in November and December? Will they accelerate the raising of the rates, and what the year-end interest rate is going to be? Originally, it was thought to be about 3.75, but now the Fed has signaled that it may go up to 4% by the end of the year, and a lot of analysts and economists are saying it may go up as high as 4.5 or even higher by the end of the year.
Wow. Well, we'll look forward to getting your view on that after we know what the Fed decides to do. Professor Young, thank you as always for coming on the program. We appreciate your insights.
Thank you.